Good morning, everyone, and welcome to the European crossover webinar. And let's go on and move this out of the way. And I had mentioned the other day, I guess it was when we had the New Zealand news breakout about incorporating some additional cross rates, and we're doing just that. We're actually going to be changing the format a little bit starting next week, also as the time changes. And you can see here that we're going to be covering a plethora of cross rates, and those will be on the bias chart. So across the board, I was trying to put these together, figure out which ones to go with, and I've added quite a few, and those will most of all those will all be added onto the bias chart, along with obviously the majors that we already covered. Now we do cover, if you look on here, we do cover the the Aussie yen already, but we'll actually be covering it all the way across the board. Quite a few, just to really to go with really what most of the chat room is focusing on. And as you can see, obviously covered euro, pound, euro, yen. We will cover as some suggestions euro New Zealand, pound Australia, which we showed that yesterday because one of the guys had asked about that for me to do some work on the pound Australia. And that worked out pretty good for him. And let's see here. And so obviously that's going to be another one that we'll be covering. It'll be part of the bias chart. Now I haven't had a chance to adjust the bias chart yet, and I had mentioned in the chat room, hey, look, or mentioned in the other webinar, we'll be looking to make some changes this next week to go with really what the demand is actually in the chat room. And so many people trade the cross rates, and I'm starting to move more and more towards those cross rates because, like I said, we just don't have the movement here. Like I talked to some guys the other day. I think it might have been day before yesterday. I remember the Wild West when the euro dollar. Now it probably doesn't say much comparison to some of these cross rates, but the euro dollar would trade with 125 pip range every day, and I mean you'd get swings back and forth, and those days appear to have been long gone and in the history books, so to speak. So yeah, I'm going myself to going with the further push towards trading the cross rates slowly but surely. And so those cross rates will be added. So this bias chart is going to be a little bit different. Obviously it'll be expanded, but we will be adding on many, including of course as we have here with the pound versus the Aussie. And like I said, we'll got this together last night, did a little bit of work trying to figure out which one's added. Thought, you know what, it looks like we're probably just going to add practically everything, including pound, yen, just the whole board here. And of course, because on the webinar, what we'll be doing also be a change there. I'm sure maybe some people would prefer that changes. We'll also we'll only be covering about 2, maybe 3 news stories a day. That's it. It'll be the morning bid and maybe the dollar. The overall, sometimes the news will focus on the euro as opposed to straight up the dollar. So it'll probably just that, the euro, and maybe that's it, nothing else. There might be one if there was like let's say when we had the other day we had the RBNZ, so there'll be a news story on that, but pretty much that's it. It's just going to be the morning bid and one currency story, and then something else that may have happened, and then that's it. Like today, there's a story about HSB slashing US shields that may impact the dollar a bit. We'll have to see, but will certainly be a changes starting next week with the time change. An expanded bias chart that you'll see is going to be heavily concentrated towards cross rates. We'll also have, as I mentioned, only about 2 or 3 news stories to start the session because we'll need that time to focus on all the pairs that we're going to be adding on here. There can be a heavy emphasis on cross rates. So with that, we'll go on and get started here with the morning bid. And like I said, starting out, it's going to be a big change, a change in the sense, like I said, it's only going to be about the morning bid, one currency story, and something else will move, and then that's it. And from there, we just dive right on into the analysis. But starting with the morning bid, and amid chaos, Brexit Day comes and goes. On the day that UK was originally supposed to be leaving the European Union, Theresa May will today have possibly her last go at getting her deal through Parliament. She is asked to vote purely on the section to do with leaving the EU and keep the one outlying future ties for another day. Despite having earlier argued the two components were intrinsically tied to each other, with the DUP at this stage saying it cannot back the deal, she is likely to need to get her entire party behind it and persuade more Labour rebels to come over. Whether the latter group will do that, they know that May could then hand over the power to a more right-wing successor, such as Boris Johnson, is highly doubtful. Still, there have been so many upsets in this Brexit saga that nothing at this stage is ruled out. If May's deal is rejected again, attention will turn to Monday's runoff of an alternative Brexit options with much softer variants and possibly a second referendum. In case of life imitating art, comic actor Volodymyr Zelensky, the political novice who plays a fictional president in a popular TV series, is set to win the first round of UK's presidential election. Well, as I mentioned, we don't like to focus on politics here. And markets, with all the troubles spooking world markets today, we've managed to arrive at the last trading day of March, with global equity set to post their best quarter since early 2012. For New York's S&P's 500, go all the way back to 2009. However, most of the gains came in January, with February a bit less ebullient and March barely eking out a return. What happened to the second quarter is anyone's guess. How do you score the equity gains with a 30 basis point drop in treasury yields? And we'll get to that because remember I told you HSBC is looking for a further drop and a big drop to boot. If the Federal Reserve is scared enough by the economy state to turn tail on a tightening policy, and if markets are to be believed, to actually be cutting rates by the end of this year. The European Central Bank has announced more stimulus, and central banks from New Zealand to Canada are hinting at cuts ahead. But back to today, and the mood ain't looking bad. Too bad. World shares are much higher. Emerging market shares of shares up against 1% and 3% plus surge in mainland China. The moves come after Treasury Secretary Steve Mnuchin commented in his productive working dinner in Beijing's before today's talk. Wall Street steadied yesterday, and the risk-on mood has helped the 10-year yields edge up to 2.40% off 15-month lows of 2.352. And with that, let's just go on and move right in. As I mentioned, the news is going to be very curtailed going forward. We'll just have the morning Brexit, one currency story, and if there's something else of note, and we'll get to that. So straight on to the one currency story. The dollar bounces, set up for the steepest rise in 5 months, even as growth slows. The dollar was poised on Friday for its strongest gain in 5 months as investors responded positively to bouncing U.S. Treasury yields, and some of its rivals were hit by dovish signals from their own central banks. With many of the currencies on the defensive, the dollar has weathered a decline in benchmark treasury yields to a 15-month low. The index was on track for more than a 1% rise in March, its best monthly performance since gaining 2.1% in October. The dollar held strong as data overnight showed the U.S. economy slowed more than initially thought in the fourth quarter. GDP growth increased at 2.2% at an increased annualized rate, the Commerce Department said on Thursday. The euro and sterling have fallen this week as yields affecting the currency have plunged, Daiwa Securities strategist Yukio Ishikui said. Feels like the impact of the declining yields again in those markets was larger. Though the U.S. yields have dropped, investors seem to have sold currencies from markets about their biggest worries about the state of the economy, and that seems to have lifted the dollar. The euro was a tad higher at 12.28, but remained down about 1.2% for the month. The sterling licked its wounds on Friday, last trading at up 2/10 at 30.65 against the yen. The dollar tacked 0.1% to 10.77 on Friday. Data officials showed Japan's industrial output rose 1.4% in February from the previous month, up for the first time in 4 months. The country's jobless rate fell in the same month at 2.3%. Investors are hoping for some signs of progress to bolster sentiment, although indications from the U.S. are that this will be a long process, said Nick Twadale. Expect more of the same minimal risk-off trade conditions if it looks to be another step in a lengthy process. China will sharply expand market access for foreign banks and securities and insurance firms, especially in the financial services. Earlier sources said China has made proposals in talks with the United States on a range of issues that go further than it has previously. And as I told you, we're cutting back sharply. The only other, if it wasn't for this, would probably be the only two news stories we have. But this is something of key. HSBC slashes U.S. Treasury yield forecast. HSB on Friday slashed its forecast for U.S. Treasury yields by a hefty 40 basis points, citing what appears to be the end of the U.S. rate cycle and a growing perception markets that interest rates remain low for a longer period. Treasury yields have tumbled some 30 basis points this month to around 2.40%. HSB said that it has cut its forecast for the U.S. Treasury yields to 2.10 for the end of 2019 and in 2020, marking 40 basis point reduction from forecast made 6 months ago. What appears to be the end of Fed tightening and corresponding shift in market expectations forwards to our low for longer rate have changed the the tail risk on our long-term yield scenario analysis. So with that, yeah, we might see a mild impact. I mean, the dollar is still pushing up higher here. We'll get to that. So let's go and take a look here on the dollar. Now, we started out the week with our Asian analysis, and we were saying one of the things that we're looking for is if we were to get this close above 96.81, and we talked about this 96.81, and we went into depth a little bit. I think it was yesterday or the day before, how the market, you can see here, bounced here, bounced here. And you know, with me, I'm all about the body touches, the body closes. I really don't care, you know, how many people actually sold the high and how many people actually bought the bottom tick. That's why I'm not interested in putting levels at the high. Sometimes, depending on the situation, especially if it's intraday on news or something, you'll see me go on and do that. And that is important to do that. Let's say you get something like ECB, non-farm payroll, and you're scalping intraday. But I like to go with the body touches. And the reason the body touches are important is because that's where the volume is. And like I said, you know, whether it's on an hourly close or 4-hour close or daily close, that's where the rubber meets the road, where you got to put up or shut up. And so this is where that actually represents volume when you see these body touches. So like I said, to me, it's been all about 96.81. Well, before this was all set up, I was going, but the body touch is going across, and you can see how important that was, okay? And then on the way back down, hitting. Once we got above it, then it was blue skies ahead, and we pushed higher. And I said, look, if we get the daily close above 96.81, it opens the door for a test up to 97.66, okay, and we'll probably see a little bit of a pause at 97.28. Well, sure enough, that's exactly what we ran out of gas yesterday. Actually, it was like about a couple of pips higher. The high was what, 97.30, so missed it by 2 pips. We started to pull back a little bit. Obviously, we're still pushing a bit higher here, and when you think about Friday's close, you know, and the way the euro is acting, it's certainly easier to be a seller. So those type of momentums carry with you. One of the reasons 50 pips used to go and say is don't fight the Friday flows, meaning that, you know, if the market has been breaking towards those, in this case the euro, you don't want to be standing in the way of a Friday, because you have a lot of retail traders that are not going to be able to hang on. And if the market's already pushing in that direction, and let's say you've got retail traders, we're all, like Blake likes to say, we're all retail traders, not big traders. But, you know, for the most part, when they group it that way, those folks, for the most part, are going to have to get the heck out of Dodge, or, you know, toss in the chips on Friday. So that's why the market is already, you know, preconditioned, so to speak, to go in that direction. And basically, they keep the feet to the fire, i.e. the euro. And so you keep getting that push lower and lower, and it's easier for the market to go with those swings. And so many times we've seen the dollar go on and finish stronger on a Friday and add on to those gains. So you're certainly, like I said yesterday, I talked about 97.28, and, you know, we got to 97.24, and it looked like we were going to pause. I thought, oh, I guess that's it. And then we made that run back up here and tagged the 28, took it out by 2 pips or 2 ticks. And then we started to pair back. Not a whole lot, but a little bit here. So let's go on and just take a look right now with the dollar index. We'll move right into the euro to start out the top of the bias chart. As I mentioned, the bias chart is going to be looking different for those of you that are just coming in. Starting next week, we're going to have a plethora of cross rates that's going to be added on here. We had, as I said, I was in the room when we had the, you know, the big New Zealand news, and I haven't traded the Kiwi in a long time, so I didn't get to join the party. I was there, but I chose not to, and I guess that was a big mistake in the sense that certainly a lot of y'all did very, very well, and I know Blake had one of his best evenings in, literally, he said, in years in the Asian session, and that was fantastic. For those that, I know some of them joined, I think Jane joined on here at the last moment and did very well. So as I mentioned, to go with what the demand in the room is, we're going to be focusing a whole heck of a lot more on cross rates. So you'll see this bias chart change. So let's go and move on straight into the euro dollar now. So with the euro, we did our Asian analysis at the beginning of the week. Obviously, we did some Asian analysis on basic technical in the middle of the week. But our forecast was, and we said that was for 11.49. Well, where the heck is 11.49? Well, where the heck it is right here, from way back here. And my target is 1149, that I'm looking for the market to resolve itself. You know, the euro, in some ways, the euro's done probably well, I guess, to hang on to the way it's pulled down. Is this was really disappointing when we broke higher. I thought we could really start to launch. That was the target I was looking for at 1445, but I thought that we'd probably maybe ease back a bit and then start to move even higher. But coming out of the gates, remember we mentioned about the 1413. This was my target here. That was pretty clear, and we got up there. But like I said, I thought we were going to really be able to add on, and we quickly dropped. And remember, that German data really just took a whacking on that too. So quickly dropped us, and I think we can just break here even further. And that bodes for 1149. Now there's some mild support here at 1193 here, but we can break lower. So we're actually going to go with 1193 on the short haul. Let's take a look on this 2-hour. My concern is that then that may just be a pause at best here. So we'll get here on the euro. Actually, it's going to come in. Let's take a look here. That 1198 is not bad at all. That's going to be it right there. Yeah, it's good, and we're so close to lows that I hate to think that there's 1196. I still think we're going to go to that 1149. I'm just wondering where there'll be a, when we trip the stops at 12, that's just going to be a downside talk. We'll probably see a, jump as we take out 12 by a little bit, maybe a pop back up to 1210-ish, maybe 1212, and then we might try and rotate a little bit lower. And then you got to be careful. I would not be trying to pick up anything, on the dip lower. But the support, we'll go with 1196. But as I mentioned before, is our overall target will be 1149 here on this move. Resistance is 1256. We'll call it 1257. 1257 right there. Moving on to the cable, one of the things we're looking for this market to potentially break lower, because you had they were hanging on, and we had seen where the market had broken higher each successive time as we got back this trend line. Although each one, very nice move up here, a little bit less. We weren't expecting a whole lot, but we thought we could move higher. Well, obviously, the realities of the whole issue with the Brexit and them not being able to follow anything has really opened the door for us to move lower. Actually, this market's actually held up probably better than probably what it should. If you remember when we covered the news earlier in the week, I think it was on Tuesday, we had noted here the market was really building up for a break lower. they were looking at some of the data and thought we could break lower. And I'm surprised that we're still holding up above 130. And that may not hold for long, but I think on the Asian analysis at the beginning of the week, we thought, or we started to hold here. I think we're looking for potentially, remember we said we'd get a pause here around this 3064-ish, that we can break down. Oh, just right here. Remember, it's just this level right there. Well, let's move this down here. This way, I think, and it doesn't mean we can't stop there, but I think we can potentially break right there, which is going to be 29.53. Now, where's going to be support in the meantime? Let's take a closer look. Got right there, 29.49. Right there. There you've got some volume coming in here. So potentially down here, 29.48. And let's see if we can see any kind of a fib confluence here. Well, 29.96 is 38%, but we're going to go with, if we do start to pile it on a little bit, we're going to go with 29.48. For right now, resistance would come in there at 31.03. And all benefits of the doubt have gone to the wayside. So we had been giving this the benefit of the doubt because it did so well in the daily overall, but those things have changed now. And with that, we'll move on to the Aussie. Aussie just hanging on, just barely trying to hang on here. But it certainly looks like it wants to eventually work lower. We'll move into the 2-hour chart. We're still looking for an eventual move on the longer term basis to 60. I think it's 68.90. Holding up well in light of where the dollar is overall, relatively speaking. But nothing's going to change unless we get up above the 71.42. So although it seems it's spread out of ways, it really isn't. we've kept that 71.45 and 70.25 a dip lower. So I think right now we're basically stuck in the mud right here with the Aussie. So it is going to be the 71.42 and down here at 70.25. And not a whole lot happening here with the Aussie. The dollar Swiss is just hanging on. I mean, you think about a little bit of a disappointment when you consider how well the dollar's doing, but then again, it might be because of some risk aversion, although the S&Ps are still holding up reasonably well. They're at 28.21. So I'm a bit surprised here that we haven't been able to move higher here. Let's take a look at the 2 hour. Resistance is going to come in right there at 99.90. That also showed up on the daily. Support fairly clear, comes at 99.20. Trading pretty tight overall. And on back on here to the dollar CAD, and it's been very resilient. Probably the one road that we keep using over and over again. Although look, here's the crude oil still trying to hold up at these, pushing back up again. But it's held up very well, and we kind of bounced around yesterday, and we quickly lost steam yesterday. Actually, I even missed this when this was actually happening. Looked over, and lo and behold, it really took a pretty decent little slide here. We went to go in and break up here and go to new highs, and we turn around and slip right back down. We were kind of jumping all over the place here, and it seemed like it quickly responded as soon as oil looked like it was under some trouble. And then once we broke a little bit higher, quickly lost its steam. This market, it's just right here at that 34. I guess here this 34.50 here. It wants to break above that, and we've talked about that. Is if we get above, and the real resistance is 34.66. That's where things come into play at 34.66. You can see here until you get there. Although we have seen the market pare back, that's where the real resistance comes in. And then from there, it's a quick jump up to 35.05. We still believe that we're going to resolve ourselves up to 35.60, but you can see it's kind of lilting here, probably for good reason, as the crude oil still remains well bid. My concern is as resilient as has been, I can't help but think it's a little bit susceptible because bulls are not getting rewarded. I mean, if you're bullish, Are you bullish saying, hey, I'm waiting for 35.05 or I'm waiting for 35.50? If you're looking for the longer term, you're probably not that worried. But on a short term basis, people are saying, wow, you know what? I got long at 34 or got long at 33.96, and I saw 40 pips and it, or 35 pips and evaporated. Then I saw 45 pips. I was in the good and evaporated. Then yesterday I saw, you know, almost 50 pips into the good, and then here it goes. Now I'm back down 20 pips. So at some point, you get some people say, you know what, forget it. I'll get back in later. I'm tired of giving up. I'm tired of giving away 30, 45 pips on these runs only to see myself come back, maybe not necessarily to flat, but give up most of my gains. So, and as we come into a Friday, and if it hasn't, now we do have Canadian data, so maybe we'll go and resolve ourselves, but it's got to be frustrating, and that's why I consider that it could be susceptible. My concern is that this last drop here, remember, and I had some bids, I think even Amanda did, here, 33.50. I thought for sure, as it happened once before, I think it was like a week before, 2 weeks before, where it slipped late in the day in U.S. session and then followed through, and then we got a low in Asia, and then we turned around and quickly popped back. This was disappointing that we didn't drop into the 50s, like low 50s maybe, and I thought it might even get down to about 33.45 actually. And here was that bar here. And I remember mentioning that and say, oh yeah, now because I was saying I had a bid at, I think it was like 53 or 55, something like that. And then I think Amanda's was just a little bit lower. And I said, it might even get here at 45. And I was thinking that's where I was going to go in Asia. So this, I think, from here would have had people in a very good shape to go on. So anybody that's bought in here, they don't have a lot to play with. That's my point. And it's getting frustrating to see, 45 pips and then evaporates, 35 pips and it evaporates. If you're down here long from down here, well, you got a lot more room to play with. But we'll see what happens with the Canadian data. That being said, no changes here for all that talk. No changes in the CAD. 33.02, 34.66. Actually, I thought I'd move this down to I apologize. Let's see, 33.02. That should be, no wonder that should have been 92. There you go. My apologies on that. There you go. 33.92, 34.66. Let's go and move into the dollar peso. Well, this came up right to the area that we're looking at for this market to take a respite, but it hasn't been much of a respite. We're looking here at this 43.5, because what you see here, the 43.4 level confluenced here. Now we had the central bank news, and there was a chance that maybe it was going to really get going. But for me, it was just an area just to take a pause here if you wanted to scalp around off of that the market would pair back. Not a whole lot, but it came off. I mean, from 43 down to 36. Eventually now we've kind of rolled even further lower here. So after making it here to 78%, and the market may need to take a respite, where's support? Well, support's going to come in right there at 19.25.6. Doesn't mean we can't pair back further, but that's what we're going to see. Resistance right there, 19.39.12. And let's go and move into the crude oil. Well, this has got to be a concern. Well, my buy chart support worked very well. We had 58.12, and the low was, oh, it was 58.01. This has got to be a concern for dollar CAD bulls. Now we do have the Canadian data, so I'll tell you what, be on your toes because we really might be flipping and flopping around today. But this little hammer here has got to be a concern here. You know, like they don't like to fade. Even Beg says the same thing. Don't like to fade. People don't like to be fading crude on a weekend, or not weekend, but I mean going on a when you're into a Friday. But this is some nice action coming back here with the crude. It really had the opportunity to really start to slide back, and wow, I'm a bit surprised here to see this, and that's got to be a concern here for dollar CAD bulls. So, but we'll see how the Canadian. Here's my thought: is that if we get the Canadian data, that may come in weaker. So we might get that chance to jump up. But as long as crude's going to stay here, that's going to work a little bit as a ball and chain. We'll see how the dollar index, which is on its highs, continues to hold up. But we might see some pretty good back and forthing. Yesterday's action, which was some decent little back and forth action, might be a precursor to what we may see today. So when you see these levels, as I said, we're looking for a bit of a pause at 34.66 and the next run at 35.05. I would be taking money off the table at 35.05. I still think eventually we'll get to 35, 35.60. Some people are looking for above, just above 36. But I would be, if crude's still doing very, very well, and we'll see what the dollar's doing. Now, like I said, we're looking for a move in the dollar to 97.66. I would be quick to take, if crude's still doing very, very well, you get that move up in the dollar CAD, certainly go with it. But I'd be quick to take a good, decent portion of the profits on that. Let's take a look at crude here on the 2 hour. Wow, it is doing very, very well. I mean, we'll just have to see, but it had the opportunity to slide here. I'm surprised we didn't slide further. I would have expected overall, I mean, we had our resistance, we had our support at 58.12, our bias chart support. The market bottomed out at what looks like 57.98. So I guess we missed it by what, 12 cents or no, 14 cents. And we've seen a pretty good smart rebound off of those lows of $1 from our bias chart support of almost $1.50. But I would have thought we would have broken lower despite our bias chart support, calling the market very well. Well, resistance on a short haul, and that isn't even that far away. It's going to be 59.89. And let's see what we do from there. Hard to fade crude on a Friday. I mean, hard to see it pulling, losing too much. Support comes in right there at 58.91. Keeping it pretty tight. Dollar in has done well and holding its own. I had got short and I ended up getting out at around, I think it was 57. I said it in the chat room, and I saw it in Asia and I'd missed a good opportunity. I didn't even see it until it was already pairing back. I was really upset. We took that jump up to 10. I think it was 10.92. I didn't even see it until it was already starting to come back down. I'm like, what the heck happened? And we quickly saw a pretty decent amount of a pullback. I was really upset that missed that because we got, was it 93, I think? I mean, we really jumped up. If you look at it on a very short-term basis, like on a 30-minute or 5-minute chart, you can see this thing just really took off. And not until it was, I think it was like 84 or something, I saw it and already seen that it was already starting to come back down. But we came off. But look, we're still holding up very well here. And the thing that upset me, because I would have liked to have shorted 87. And when I saw it jump up to 80 to 93, and it was already, I think by the time I saw it, I think it was already at 84 or something. It still continued to dip a little bit further. It kind of popped back a little bit and then rolled a little bit lower. But I was a bit upset that I just didn't even happen to catch it. I didn't even see it until it was happening. But that's my concern, is that it's held up so well here. I didn't mind. I thought the good pot shot was going to be an 87. And we had talked about that before early in the week, because remember, we thought the best we could get was we revised it down to a 79. I think we had it as 86 or 87 for the week earlier, and then we revised it down yesterday to, I think it was 79. But we did come up here meet that, and that was some quick change here. But I don't like the way it's been holding up so well. I think the people shorting here, there's a thing about day trading. The story goes, it makes a lot of sense, or what do you want to call it? Not the story, but whatever it says. Day trading is not being right. It's about knowing where other people are wrong. Meaning, how far can the market press against them? I don't think you're wrong necessarily to be short, because I think that eventually we'll get to 929. But in the medium term, on the very, very short term basis, they may try and squeeze and knock out some of these people here. So could we pop up? Yeah, I think we could pop up maybe towards this 1108, and then that might knock a few people out of the box, and then eventually we can pull lower. Don't forget, the S&Ps are still doing relatively well. And I remember what Blake was saying. It's into the fiscal year in Japan, so you might see a little bit of a hijinks that could push this even a little bit further here. It doesn't seem to make sense because of repatriating funds. But that being said, I think maybe we could see that push up, and the resiliency of this market really is holding up at this level. Has me a bit concerned that we might be able to push it and try and maybe even goose the stops at 11, and then we'll tar, and then we can see the next move lower. I still think we're going to 929, but in the meantime, we're holding up too well here. So I think that we may want to try and, the market may try and goose the stops a little bit, but we shall see. So short haul basis, we're going to go in and say resistance is going to be at, let's just go with, is right there, 1195. 1195, and only because I think, well, we're going to see how the S&Ps do, and it's into the quarter also. So we may keep this bid here in the S&Ps, and that may keep an undertone bid here in the dollar yen. So let's go with 1095. I think if you hold it for a longer term, I think it'd be fantastic. Anywhere up in here, up in the 1090s. I think, like Blake likes to say, if you go to sleep and wake up a little bit later on, meaning in another, week and a half or a couple of weeks, you'll be happy. But in the meantime, they're keeping the bid up in here. Support on the downside will be, $10.37. We pushed up a little bit higher, not a whole lot higher in the Aussie yen. Certainly the S&Ps are having their effect on it. Resistance Well, we're looking for maybe end of quarter, so maybe retaining this bid in the S&Ps. So let's give it some extra room, and that's going to be 78.79, 78.79 if they push some stops. Support's going to be right there, 78.21. With that, let's go and move into the cash dollar index. Well, we're keeping that bid going here. Look at the euro, 12.15. We talked about that. Remember what I mentioned about what 50 pips like to say is don't fight the Friday flows, which goes back to, when you see the market starting to tilt in one direction, the thought process is retail traders are going to are going to get forced out of their positions. And like I said, we're all retail traders. We're not big traders, but the thought process is for the smaller retail trader that may have, let's say, bought the euro on Wednesday or bought the euro on Thursday, they're feeling the pinch. And as we go into Friday and we pushing a little bit lower, it's going to feel that trader's going to feel the necessity to just get out. Or some may have to be flat if they're using some pretty good sized leverage. They may have to take exit, and so the market is aware of that, and so hence the saying, don't fight the Friday flows, and that's the direction we're going, and we're still pushing it higher. And plus we've also seen historically on a short-term basis where the dollar will just go on and finish Friday on decent size, as far as in continuing its momentum. So we talked about this earlier in the week. If we could get that daily close above 96.81, this would open the door for a challenge of 97.66 with just a pause here at 97.28. Well, this has come into fruition. It's played like a playbook. You know what I mean? So yesterday we did see that pause at the 97.28. Looked like we were going to get there, and finally came up there and tagged and eased back. Not a whole lot, but it did go and ease back. And now here we are reasserting ourselves, and it looks like certainly like it wants to play itself out for 97.66, which could bode for obviously this euro cracking the 112. Now we're looking, like I said, we've got some support at I believe we have it here at 11.96, and we'll take a look at that right there, 11.96. But like I said, we have the potential to get down to 11.49, and this euro breaks 112 on a Friday. It's just not going to look good, folks. And so we'll see how we go in the press. We also have Canadian data that would certainly add a little bit to the dollar strength, as well as the losses we've seen here on the cable. So where are we going to right now? Well, we're going to go with the target, and that's 97.66, because that's what we said. Hey, if we break 96.81, or we get a daily close above 96.81, we're going to 97.66 target with a pause at 97.28. Well, 97.66 is on tap. That will be our resistance. Yeah, I got a feel for those that right now with the euro, they're just not. It's not holding up, and it just continues to slide, and probably cursing the idea that they even thought about buying the euro, because that momentum, like I said, that momentum just keeps working against you. You're thinking, okay, and they should hold in this area. Next thing you know, you're looking at 1208. And I'm talking for short-term traders. And you're thinking, well, 112 should hold. If I can just hold up against these stops, the stops dip up and the market bumps back up to about, let's say, 1210. You're thinking you're out of the woods, and here we go and slide right back down. And then as you go late in the day on Friday, then forget about it. Then you really start to see the momentum pile in, and then you got traders at that point just throwing in the towel. So henceforth, we're just going to maybe just keep this bid going. Support is going to be 97.08. Now look, new lows here in the euro. Look at that, new lows. Let's see, go in here. I mean, the Bund has come down, but it's still way up here in the stratosphere. I think Pedro's doing pretty good. I think he sold calls right up against this area, so he's doing a little bit better. But the thing is that look at this. And I've said this earlier in the week. Actually, when I did the middle of the week Asian analysis for basic technical, it's hard to be a buyer of the euro when you got the Bunds up at these levels. It's just hard to be a buyer of the euro. You just really can't. The Bunds have come back down, but how can you can't? It's hard to be a buyer looking for a little bit. If you're scalping, that's different. But if you're looking for and I don't mean a big move, but you got a lot of things really going against you if you're trying to buy the euro. Short-term resistance is going to be right there, 68.37. Support comes in right there, 67. Actually, right there, 67.85. I thought we might have jumped up here to this 11,575. Let's see, we had our support here. This week, the DAX will probably be going to the wayside. But as I mentioned, starting next week, we're going to be adding a plethora of cross rates onto the bias chart. So we probably won't be covering the DAX anymore. We'll keep the Bund because of the importance that it has to the euro, but probably dropping off the DAX. Resistance on the upside, if we do get that into the quarter squeeze, we'll go and still keep this 11,575. Or actually had 11,521. And the support was 11,357. We're going to go and keep that here, 11,357. Look at that dollar. It's still pressing away. And look at this euro now. New lows here, 12.13. Hard to fight those Friday flows. Definitely tough to fight those Friday flows. And here's the dollar. Like I said, I think we could just get pushed up to that 97.66. That's going to be our target here. I'll get the bias chart posted. Thanks for joining us here. And like I said, starting next week, we'll see a bit of a revamp European crossover. We'll probably only have 3 stories at most of the morning bid, 1 FX story, and if there's anything else of note, that's it. And then we just dive right into the bias chart, and you'll see I wasn't able to change this. I'm not a good Excel whiz, but I have to add these and make them look uniform to whatever. But we'll be adding on about 4 to 5 cross rates added on to this here. So good luck trading, and we'll see you in the room. And thanks for joining us here on the European Crossover webinar.